the first time in more than 2 years, mortgage holders are this morning counting the cost of a rate hike. The Reserve Bank pulled the trigger, raising the official cash rate by 0.25 to 3.85%. All four major banks were very quick to pass on the rise, as focus now shifts to inflation, which the RBA says is going to stay above the target for at least another year. Sally Tyndall, Canstar's Data Insights Director, joins us live. She's very busy this morning. How is the hike going to change things for mortgage holders?
Oh, it's going to be foul-tasting medicine, this U-turn. I mean, 5 months ago we were eyeing off another cut. Yeah. Now we're looking at potentially yet another hike for a $600,000 debt. That translates to $90. That's the increase to their minimum monthly repayments. Plenty of people lugging around $1 million debt. That's an increase of $150. Now, as you said, CBA, all big four banks have announced that they're passing it on. CBA, ANZ, NAB, they're passing it on next Friday. That's Friday the 13th. Read into it as you will. Westpac the following Tuesday. That's when your interest rate will go up. And make no mistake, banks will start calculating your interest with that higher rate from that day. But they will give you more time before the money actually comes out of your bank account. You'll get a letter either in the mail or as an attachment in your banking app. It will tell you your new minimum monthly repayment, and then it will give you at least 20 days in the case of CBA, 30 days in the case of the others to get your affairs in order. So if you can't clear that amount, you've got to pick up the phone to the bank. You've got to talk to them about what your options are.
Gee, they're quick. See you next Friday, banks. Moving on, the savers. What's happening with the savings accounts?
Let's start with the good news. Macquarie Bank came out and announced it's passing the hike on in full to its savings accounts and its transaction accounts. That's fantastic. It puts heat on the big four banks, who need some heat right now because all four have said they're under review.
Hang on. So they passed on the rises straight away, but they're thinking about the cuts?
They're still thinking about what the rises for savers. Yeah, we expect that they'll pick and choose. This is what happens. If history is anything to go by, they'll come through, pick and choose which savings rates get a boost and which miss out. They tend to happen at the same time as the home loan hikes, but we don't know yet what they look like. And so what I would say is if you've got money in the bank, put the heat on your bank. Pick up the phone and ask what they are doing for you, and then keep an eye on your rate, because you want to make absolutely sure that your bank passes it on in full, not just to your introductory rate, not just to your bonus rate, but to the entire ongoing rate on your savings account.
Because there are plenty of self-funded retirees who are living off that money. Why do the banks have to think about that? That seems ridiculous.
Oh, absolutely. They shouldn't have to think about it. They should be passing it on in full. They passed on, they saw 3 cash rate cuts in 2025. That hurt self-funded retirees. It's time to pass it back on in forward.
Exactly, and we knew it was coming. Is it time to lock in a fixed rate, or is it too late?
It's not too late, but we do expect to see fixed rates starting with a 4 gone within possibly by the end of this week, because banks are now starting to look ahead, factor in the possibility of 1, maybe even more cash rate hikes. But if you do want to fix, now look at your options. Consider a rate lock fee, because that sets your rate, that fixed rate, while you get your paperwork in order. It does come at a fee, but also understand, the cash rate could do anything in that period of time. So be happy with the rate that you choose. There's a world of difference between a competitive fixed rate and a lackluster one. So spend that time shopping around. A competitive fixed rate would look like probably very low 5s at this point in time.
Okay. Thank you very much.